The IRS just changed the tax brackets for 2026, and if you're retired or about to be, this could mean hundreds, maybe thousands of dollars back in your pocket. But here's what nobody's telling you clearly. There's a brand new $6,000 deduction for seniors that expires in 3 years, and most retirees don't even know it exists. I'm going to walk you through exactly what changed in 2026, the new bracket numbers, the bigger standard deduction, and that $6,000 senior bonus. And I'll show you how to use these changes to keep more of your money. But first, let's talk about what actually changed and why it matters for your retirement income. Because if you're pulling from a 401k or taking Social Security, these adjustments could shift how much you owe or don't owe.
Every year, the IRS adjusts tax brackets for inflation. Usually it's small, a percent here, a percent there, but 2026 is different. Why? Because of a law signed in July 2025 called the One Big Beautiful Bill Act. It made the Trump-era tax cuts permanent, and it added an extra inflation bump to the lowest brackets, the ones most retirees actually live in. Here's what that means in plain English. The income ranges for each tax bracket went up, so you can earn slightly more before jumping into a higher tax rate. The standard deduction went up, so more of your income is automatically tax-free. And there's a brand new $6,000 deduction for anyone 65 or older. If you're thinking, I don't understand any of this tax stuff, that's okay. I'm going to break it down step by step. First, the bracket numbers, because this is where the money actually is.
For 2026, there are 7 tax rates: 10%, 12%, 22, 24, 32, 35, and 37%. Here's what changed for single filers. 10% bracket now covers up to $12,400, up from $11,925 in 2025. 12% bracket, $12,401 to $50,400, up from $11,926 to $48,475. 22% bracket, $50,401 to $105,700, up from $48,476 to $103,350. 24% bracket, $105,701 to $201,050, and so on up the line. For married couples filing jointly, 10% bracket up to $24,800, up from $23,850, 12% bracket, $24,801 to $100,900, up from $23,851 to $96,950, 22% bracket, $100,901 to $211,550, 24% bracket, $211,551 to $402,900, and higher brackets follow. Now, here's why this matters for you. Those bottom 2 brackets, the 10% and 12%, went up by about 4%. That's bigger than usual, way bigger. For most retirees living on Social Security plus some retirement withdrawals, you're in these lower brackets, 10 or 12%. And now those brackets are wider, meaning you can pull slightly more money from your 401k or IRA before bumping into the 22% rate. Let's make this concrete. In 2025, if you were single, the 12% bracket ended at $48,475. In 2026, it ends at $50,400. That's almost $2,000 more of income that gets taxed at 12% instead of 22%. If you're planning to pull money from retirement accounts this year, that extra room matters. Now let's talk about the standard deduction, because this one's automatic. The standard deduction is the amount you automatically subtract from your income before taxes are calculated. Most retirees take the standard deduction. You don't itemize unless you've got huge medical bills or you're still paying mortgage interest. Here's what it is for 2026. Single filers, $16,100, up from $15,750 in 2025. Married filing jointly, $32,200, up from $31,500. Head of household, $24,150. And if you're 65 or older, you get an extra bump. Single filers over 65 add $2,050. Married filers over 65 add $1,650 per person. So if you're a single retiree over 65, your total standard deduction is $16,100 plus $2,050 equals $18,150. If you're married filing jointly and both over 65, $32,200 plus $3,300 equals $35,500. That's $35,500 you subtract from your income before any tax is calculated. Pause for a second and think about what that means. If you're a retired couple pulling $40,000 total from Social Security and retirement accounts, and your standard deduction is $35,500, you're only paying tax on about $4,500. At 10%, that's $450 in federal tax on $40,000 of income. This is why most retirees pay way less in taxes than they think.
Now here's the big one, the new $6,000 senior deduction. This is brand new for 2026. It's part of that One Big Beautiful Bill Act I mentioned earlier. If you're 65 or older, you qualify for an extra $6,000 deduction, on top of the standard deduction, on top of the senior edition we just talked about. Here's how it stacks. Single filer, age 65 plus. Standard deduction, $16,100. Senior edition, $2,050. New senior bonus, $6,000. Total, $24,150. Married filing jointly both 65 plus. Standard deduction, $32,200. Senior additions, $3,300. New senior bonus, $12,000, $6,000 per person. Total, $47,500. $47,500 off your income before you pay a dime in taxes. Let me show you what this does in real life. Say you're a married couple, you're both over 65. Your income for 2026, Social Security, $36,000, about 85% is taxable, equals $30,600. 401k withdrawal, $20,000. Total taxable income before deductions, $50,600. Subtract your deductions, $50,600 minus $47,500 equals $3,100 of taxable income. Tax on $3,100 at 10% equals $310. You're paying $310 in federal tax on $50,600 of income. That's an effective tax rate of about 0.5%. Now here's the catch, and this is important. The $6,000 senior deduction phases out. It starts phasing out at $75,000 for single filers, $150,000 for married filing jointly. It phases out at 6%, meaning for every dollar over that threshold, you lose 6 cents of the deduction. So if you're earning under those limits, you get the full deduction. If you're over, it shrinks. And one more critical thing. This deduction expires after 2028. You've got 3 years, 2026, 2027, 2028, to use it. Then it's gone, unless Congress extends it. If you've been thinking about doing Roth conversions or pulling larger amounts from your IRA, the next 3 years are your window, because your deductions are higher than they've been in decades, which means more of your income escapes taxation. Now let's put this together with a real scenario. Let's say you're single, 67 years old, retired. Your 2026 income, Social Security $24,000 per year, 401k withdrawal $18,000, small pension $8,000, gross income $50,000. Not all of Social Security is taxable. For you, about 85% is taxable. That's $20,400. Taxable income before deductions. Taxable Social Security, $20,400, 401k, $18,000, pension, $8,000. Total, $46,400. Subtract your deductions. Standard, $16,100, senior edition, $2,050, senior bonus, $6,000. Total deductions, $24,150.
Your taxable income, $46,400 minus $24,150 equals $22,250. Your federal tax, first $12,400 at 10% equals $1,240. Remaining $9,850 at 12% equals $1,182. Total, $2,422. On $50,000 of gross income, you're paying $2,422 in federal taxes. That's an effective rate of about 4.8%. Without that $6,000 senior deduction, your taxable income would have been $28,250, and your tax bill would have been around $3,142. That one deduction saved you $720. And if you're strategic about staying under that $75,000 phase-out threshold for the next 3 years, you keep getting that savings.
Here's what you should do with this information. 3 things to focus on right now. 1. Check where you land in the brackets. Pull out your 2025 tax return. Look at your taxable income line. Now look at the 2026 brackets. Are you in the 10% range, the 12, the 22? Most retirees are in the 10 or 12% bracket. If you are, you're paying way less than you probably think. 2. Max out your deductions. If you're 65 or older, make absolutely sure you're claiming the standard deduction, the senior edition, and the new $6,000 senior bonus. That's not optional money, that's automatic. Don't leave it on the table. 3. Plan for the next 3 years. The senior bonus deduction expires in 2028. You've got a 3-year window where your deductions are historically high. If you've been thinking about converting traditional IRA money to a Roth, taking larger withdrawals to delay Social Security, pulling money for a big purchase, these 3 years might be the cheapest tax years you'll ever see. Talk to a tax professional. Ask them, should I be accelerating income while I've got these big deductions? For a lot of retirees, the answer is yes. Look, taxes are complicated. The IRS doesn't make it easy. But here's the bottom line for 2026. The brackets went up, your deductions went up, and if you're 65 or older, you got a $6,000 gift from the government that most people don't even know exists. Use it. All right, that's it from the porch today.